Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guest that is probably the most sought-after guest from anybody in at least the alternative media space. He has one of the most views on my channel. That probably every month I have people asking, when are you going to get this guy back on? And I'm talking about Mr. Gold, Jim Sinclair, legendary Jim Sinclair. Thank you for joining us today from your home in Connecticut.
Well, it's nice to be here, Greg.
I just want to continue a little bit longer, and this is what I've learned, and I've only been covering the economy since my CNN days in 2007, and what I've learned is that the gold guys, i.e. Bill Holter or Andy Hoffman or you, the preeminent gold guy, you can't just, if you're a gold guy, you can't just know gold. You got to know everything. You have to be like Bruce Lee and trade every part of your body. Because everything comes back, you were telling me in the preamble, yeah, that's right, everything comes back to gold. You got to know bonds, you got to know securities, you have to know derivatives, you have to know stocks, you have to know everything when you trade the markets. And this is why my first question is so important, and that is, how bad is this going to get? How terrible is this going to unfold and look like? Is there any comparison at all to the Great Depression?
No, it's actually beyond that. There is no historical facts that we can go back on to make future judgments. We don't have any time in history that so much money actually came into a system globally. We don't have any history of what we had in general equity markets yesterday. Thousands of points is what the market moved if you count its ups and downs. The volatility was unimaginable 6 months ago. 6 years ago, they would have put you in a loon bin if you made a suggestion that a market could open up down 1,000, down 100, down 500, and do that most of the day. So what makes it more difficult now for the listeners, for the analysts, for all of us, is that you can't pick a Weimar experience and say, well, here's the currency experience, therefore the following will happen. The lack of historical precedent, the outrageous volatility within the marketplace, the rather calm comeback today, not unimpressive, but nothing to write home about in comparison to the last 3 days, is so different because the environment is so different, because the fundamentals are so different. And when I listen to the people speak on financial TV or whatever interview, maybe I've been around too long, but I remember the Panmunjom, South Korea, North Korea, the United States discussions seeking a truce. When I hear that they're talking and that makes everything fine, my God, they talk for years. So there's so much in this mix, especially along the lines of credit, that the market of yesterday should not, could not, would not be allowed to follow through on the downside. I'm actually surprised that they didn't do better. I think this is a warning, what you had yesterday. Yesterday being the day in which we opened down 1,000 points.
The pre-crash. It's
yes,
a pre-crash.
This is a pre-crash, and we're not making it through September without the real thing. And everybody's on credit. Main Street's on credit. There seems to be a bubble of historical proportion when it comes to the amount of money supporting the accepted lifestyles as being the new normal. And the Fed has used every single instrument it has in its toolbox. Whatever they do, they're going to have to invent. Raising interest rates at this point in time is impossible today. The market's so fragile, and we saw that yesterday, that nothing can come out that causes people any concern, or derivatives any change. Nothing whatsoever. And we're going through a period of time where expecting nothing meaningful to occur is a dream, because these are times never experienced in financial history. Nobody can claim to know that they have a same similar and be able to draw a conclusion from that to outline where we're going. It's very possible we're going to have a super civilization change. We talked about the three phases that we were going to go through when we last spoke about a year ago. And there was the great flushing, which we all know very well. That was Lehman Brothers. And after that, the great leveling. And the great leveling, just look down, where did Main Street go? Main Street's not here. After the great leveling comes the great reset. And bear in mind that the purchase of gold, if I can bring that in, is a harbinger of the conditions that will be rendered onto the great reset. And the buyers have been buyers based on policy, not on investment. China isn't in to spin a profit. Russia's not there to turn a good calendar year. They're there because they have a view, I think a correct view, of where we're going as an economy, where this country is going as a meaningful nation, the quality or lack thereof of the leadership and potential leadership, the degree of credit on which this stands, the fact that if you can't get it back into gear with $4 trillion plus put into the system, what in the world is going to get it back in gear?
Nothing.
Nothing. That the come down is going to be dramatic. And there's a very good possibility that we who have been in North America, not ignorant, but not focused on what's happening in the world compared to Greece, compared to France, even Germany. You're going to have people who are not going to like what's going to happen.
What does it look like to the man on the street? Describe that to me.
Well, it will start off looking like we stepped into the black hole of recession, depression. And regardless of the rhetoric of central banks, they really have no significant record of turning hawk in a situation where illiquidity is at the heart of the various market collapses which are forthcoming. So the idea that Chair Yellen is going to raise rates and then slowly continue them back to some form of normalcy, you have to ask yourself, what is normal now? And a slight change in rates will have such a dynamic impact on the biggest mountain in history of over-the-counter and derivatives that they would go up in a conflagration, something like what's happening in the California forest. They can't be put out. This time, there is no tool that can be used to extinguish the fire except it burns itself out. And in burning itself out, it may actually come to a point where there is an entire new social and political order. One brought about by the dissatisfaction of the disappearing middle class, about the difficulty that we're all starting to feel in getting by month to month. The 1% live in La La Land. They exist in some other place in space. They're totally out of touch with the problems of the average consumer. If you don't have a conscience, you can't grow one. If you don't have a conscience, you don't know you don't have it. In other words, a sociopath has no idea that they should feel any other way than the way they do. Competition is the rule. Success is why I'm here. I deserve it all, and I'm going to get it all. At whatever expense it is, that's the attitude. Attitude running Wall Street, attitude running Washington, attitude running markets. Now, anybody who for 1 minute argues against manipulation really simply needs to replay yesterday in many markets, especially the equity markets. That was not a normal move. That didn't have to do with significant economic change. That really wasn't brought about by the problem in China. It was brought about by a basic illiquidity that has left the arena, where markets were making new highs on lower volume, where there were the super active stocks. But sit back for a minute. If I could get a stick and put Velcro on my forehead and a camera on top of the stick, and if I didn't make the camera, I sure don't make the stick, I didn't make the Velcro, but I'm worth $100 a share. Something is really wrong.
What do you think? I had a friend of mine talk to me last night, as a matter of fact, good friend of mine, smart guy. And he's telling me he's got, I said, he's in 8 banks. I said, and tell me if I told him right. I said, it's the currency that's going to be in trouble, not just the banks. You're always fighting the last war. And long pause, silence. And I said, how much water do you have? Oh, I got 7 gallons of water. How much food do you have? Oh, I got a week's worth of food. How bad is that enough? And how bad? And what's enough? And how bad is it going to get for the man in the street?
Well, we do have historical precedent for that, in the sense that dislocation of currencies has a primary impact on the perception of inflation, which, when it occurs, makes distribution and the means of distribution too complex to function. This is a currency problem. We're not going to get away from that. The dollar requires a lot more than algorithms to function, or yesterday we wouldn't have had the dollar flat on its back after almost touching 100 on the USDX and then trading below 95. It's not that there isn't any food. It's that they can't get it to the store because of the lack of confidence that the truck driver has in what he's being paid will buy, so that the tools of distribution, from railroads to trucks to whatever, find themselves in such disarray in managing their business that your ability to obtain the goods and services you need are significantly interrupted. Now, what does that look like? Well, it looks like hell. That looks awful. That looks like that's the pictures we've seen in South America with no toilet tissues available, with grocery stores that in fact are empty. We've been to a great part. $4 trillion went into not the economy, but went into markets which turned it into absolute casino. And the 1%, I'd say rather the 1% of 1% who has in fact benefited magnificently from all of this.
Lloyd Blank finds a billionaire. He should have been a greeter at Walmart after AIG and that little bad trade. He's now a billionaire 7 years later.
That's right. Thousands and millions. Think about it.
Gosh.
And a kid boosts a car in the ghetto, bam, he goes to jail for 20 years. There's something really wrong.
I want to get into the manipulation, and I'm so glad you brought that up, but I wanted to, not a word on the mainstream media, as if the President's Working Group on Financial Markets, a.k.a. the Plunge Protection Team, does not exist. It does. You can Google it. It is the Fed, the CFTC, that's the futures, commodity futures, the SEC, and the Treasury, and they went at it on Monday, and all they could get is a 588-point loss, and then Tuesday, all they could get was, a few hundred points? Oh, what does that tell you about, and to me, as just a reporter, I just say, whoa, something's wrong, because you know it's manipulated, as to your point. So what does that tell you about the problem?
They are, the people that we're talking about, very prestigious, by the way, to be part of the funds protection team. You get very high kudos in the social standards of Wall Street and finance. That's got Dickens scared out of them. They actually backed off in their willingness to provide the funds necessary and central bank buying of indices as well as the underlying securities in the indices. That's your warning.
Oh.
The warning is markets can overrun plunge protection teams. Markets can and will overrun the manipulation of metals and currencies. The market will overrun the false strength in the U.S. dollar, and the idea that any lift in the interest rates would actually be beneficial to the dollar is absolutely incorrect. For a day, maybe. A week, possibly. But I think a week is stretching it. So what happened yesterday is a trading desk prepared to handle a market problem enters into the market 5 minutes after the opening with very substantial funds, which are generated by spreads, where an unruly taking off of the spread will create, in yesterday's situation, a bull influence in the market. They ran out of money. They went to their limit. Somebody wasn't around to raise the limit. If I was running the trading desk, I would have spent everything the U.S. Treasury had. I would have taken it to plus $50 yesterday, and I would have held it there with made up money if I had to. Who's going to margin call the government? Okay, UBS, you see, today got a pass from any prosecution or investigation in the manipulation of silver and gold. What does it tell you? Well, the evidence is they did manipulate, but they're forgiven by U.S. judiciary because they were doing the work not of God, but they were doing the work of the administration, of the advisors to the administration, who mostly fear weakness in the U.S. dollar. All of us circles in a universe around the bond market and the U.S. dollar market. And as long as they were able to be held and coerced, manipulated, jiggled to higher prices, you continue the facade, the camouflage. But what we saw yesterday was that the protection, funds protection team can be overrun by the market. It got overrun. Today, it's overrun.
Monday, Tuesday wasn't a good day. I mean, they needed a 1,000-point day. They didn't get it. I mean, they got a 1,000-point down.
I guarantee you, you'd have it. But this tells us what it costs to have. And the fact that it ran up against some very heavy barriers that it said, you got to pull out. Pull out. The plunge protection team. Look what happened. We do know their limits. We do know that the infallibility, the omnipotent power of the Fed is a total fallacy. And we also know, coming out of yesterday, that there is no Fed put. Coming out of yesterday, we know that the plunge protection team has limits. And prior to that, we had the Fed at our back if we were in equities. We could have a little camera on the top of our head and get $100 a share for it. We could experience interest rates that don't even exist, where pretty soon you'll pay the bank to hold your money.
Okay, so I want to get to gold and silver, and I want to, because you said, and I think it was the last interview a year ago, and you said, and I know how smart you are, and I know how experienced you are. And you said that the gold would be $50,000 an ounce. Bill Holter came in and doubled down and said that $50,000 may be ridiculously low. Give us your synopsis of gold. Is this the bottom? Is the bottom in? Do you have sources that tell you that? Does your analysis tell you that? Is that both? Tell me about gold, and then hopefully a little bit about silver.
Well, nobody can trade gold based on any technical analysis. There is no reliable system in the marketplace at the present time. If you want to know what gold is going to do, you better have a open line to what you might call the inside, because the price is made according to the flavor of the day. Dollar up considerably today. Gold did not perform yesterday that well because it's easier to manage than anything else. So it would be natural to take a significant amount off the price to make other things, equities and the dollar, look better. I don't claim that I called the top in March of 1980 because of any kind of a system. Greg, I was told. And I acted on what I was told. And
you believed them?
I believed them.
That was a huge call, incidentally. Not very many people were told that because you made. But let's give yourself some credit, because you said back in the '74 or so that gold would top out at around $900 an ounce, and you did some analysis on that. So
I've had some ability to forward see prices.
Yeah. So 6 years earlier, you said, this is going to go way up.
Well, I can tell you what I've been told.
Okay.
Why don't we go with that?
Yes, go.
Number one, the downside on gold is extraordinarily limited here. Two, the rally that we're facing that will come in gold is going to be stupendous. And the one thing that I find very interesting is, three, we may never call you back because this may be the rally you don't sell.
Oh, the rally you don't sell.
This may be the rally you don't sell because gold is moving from a currency form to a valuation form. Now we do have some precedent in history for that in the Weimar Republic, because bankers don't lose, and debt after the horrible experience of inflation was readjusted to the grams of gold the debt equaled prior to the Great Inflation. So the function of gold in the Weimar Republic was a function of valuation, not of being a currency form, not of being a storehouse of value or a measure of value, even though it became that. There's a very good possibility that the Great Reset may very well elevate gold even above currency. And the fact that the physical market for gold has been dried out like a desert over the last few years leads me to believe that our new trillionaires and billionaires are not ignorant of the fact they need to protect themselves.
Rich people are buying gold.
Physical. Anytime the market comes down like yesterday, you can't get them. You can't. Now if you go to buy physical, you need to send them the money and wait a month. Never happened before. What in the world kind of market can you have when the underlying commodity is at maximum demand versus supply, oversupply, and the paper market is under pressure continually? That's a manipulation to accumulate. And the one price that the Chinese ever uttered a price in gold was when there was a major block for sale by maybe it was Bank of International Settlements that of all countries was bought by Ireland, and China let it slip at the $1,100 level, where that block traded was a level of their interest. So, if you take number one, that the downside is very limited, I'd say that's a comment on sovereign buying regardless of what's going on in the marketplaces because of the liquidity that exists in U.S. Treasuries instruments to be able to exchange for gold. That's China. That this may be the last time, this is the last time we'll call you, means that this is a rally not to be sold.
So where's the price going to go?
What is coming up in front of us is the Great Reset, where currencies will wear their gold like a lady wears a necklace. And the most beautiful necklace will be the strongest currency. And the lady without the necklace won't be invited to the ball. Huge changes in front of us. Dollar's always going to be with us. Yuan, all of our currencies are still going to be there. We're not going into one single currency. The SDR is nothing more than a glorified index of currencies. It's a cure to nothing. How can a package of junk cure the problem of junk? It can't. So the whole idea that the SDR is something of a meaningful replacement is an absolute fallacy. It doesn't show an understanding of currency markets. It's a total expose of ignorance. The last man standing, or the two last men standing, will be gold, and then the item which is gold on steroids, silver.
And I wanted to get around, as you know, you're Mr. Gold, $50,000 gold. That's what you had said the last time you were on. And you know, in the pre-interview you said, what's $50,000 worth? So, and you know, people just don't have any idea what hyperinflation could do. That's what you're talking about. Tell me about $50,000 gold, and where's the price going?
Well, I think in order to understand that, and not to say that, you know, maybe it's time for Mr. Sinclair to leave the industry and relax. It has to be clearly understood that the engine which creates the phenomena is the expectation by the masses and trading by the crowd that we're entering into an unprecedented deflation. And it's the reaction of central banks around the world to the concept of deflation that brings about hyperinflation. So, in a market yesterday, the overall thought, when you see a market down $1,000, is the bottom is about to drop out of business. And that's what the plunge protection team acts to maintain psychology. This whole thing is a psychops. And maintaining psychology is to turn the mind of the market away from any concept of the bottom dropping out to a concept of control. As long as a thought of control exists, the Fed controls, the plunge protection team, which is legal and real, controlled. The concept towards deep deflation will be offset. It's the reaction of the central banks globally to the threat of international horrible business, deflation, that will bring about a complete capitulation to any fundamental laws, understandings of economics, to any control or conservatism when it comes to the manufacture of currencies, to debt monetization of all kinds of debt in order to try and maintain some equilibrium. The price of gold will go to a level that is going to surprise everybody. Now let's go back to what we did in part one. I was told this is the rally you might not sell. That means to me that the price of gold will go to a level and not react violently down from that level. It might be set, I doubt it, or it might trade basically around the high level with a few hundred points to either side. This is when gold is going to reach the levels that today are considered to be more mental illness than monetary analysis. And silver is best understood as gold on steroids, because whatever potential and direction is taken up by gold will be multiplied times 2, times 5 by silver. Although I'm not told that this is the last rally in silver. So silver may outperform, no, will outperform gold. But its performance might be a temporary, multi-year though, experience in a bubble developing within a commodity that is not entirely related to the respect economically that a country holding a very significant amount of gold will get in the Great Reset coming soon.
And when you say Great Reset, I want to get to it. Is the end game, are we in the final stages of the end game when you talk about the reset? Are we almost there? I mean, here we are late August and September, October. A lot of people thought that there's going to be a lot of calamity, a lot of pain in the September, October time frame. What say you?
It's already happened. It started yesterday. Yesterday was the day that confidence was lost. Today, it better get much higher than it is trading right now in order to have had any significant impact on people's subjective confidence in paper assets. We are in it. By the end of September, there's not going to be any doubt but that we're in it. And this process is not going to begin. It has begun.
So the calamity is we're not making it out of the fall before people know what you know now, and that is this is a Ponzi scheme and it has crashed or is in the process of multiple crashes to an ultimate bottom.
We're not making it into the winter before it's known globally. That's something that most people don't understand, can't describe, can't pinpoint, can't put blame on, has taken place, which is irreversible. And all of what we've discussed today will be beginning to happen in the initial stages of a dislocation so severe that the means to overcome the dislocation need not be as valid as you would think it is today. Example, now I can go back to history on this one. In the Weimar Republic, when the currency collapsed, people were looking for a solution. And they adopted the Rentenmark as a solution in which Germany proposed, promoted, propagandized the Rentenmark as owning the real estate of Germany, which of course it didn't. Things get so bad at times that something which you would consider now not to be a major relevant point is exactly what will turn around the situation sometime in the past 2020, and that's gold, the last man standing.
And your sources, I know you can't disclose your sources. Have your sources ever been wrong? Did they ever tell you something and gave you disinformation and make you zig instead of zag?
No.
They've never been wrong?
No.
Do you think they're right?
Yes. I'm wondering why I didn't hear about the high at 1900, and I conclude because it's not the high.
And I know I'm pressing you on this, but if you're sticking by your $50,000 an ounce and reference to hyperinflation, you're sticking by that call.
I'm sticking by that call.
Jim Sinclair of jsmindset.com. Also, you're with Bill Holter with the Holter-Sinclair's collaboration. He's a good man. And
Yes.
Thank you so much for coming on and giving us your analysis and information and inside information. Thank you very much for coming on. Would you come on before the end of the year?
Why don't we say when I have something to say that you and I discuss, and you determine as I feel that it's meaningful, whether that's a week or a year, I'll be there.
Jim Sinclair, thanks for coming on USAWatchdog.com. Really appreciate it.
Thank you so much, Greg. I appreciate you.